Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Spill. Home Depot generates nearly 50% more sales annually than Lowe's. It's also got a better 10-year revenue growth rate leading into the pandemic at 4.23% compared to 3.99%. Frankly, Home Depot was a better stock than Lowe's, was being the operative word. However, under the direction of Marvin Ellison, a former Home Depot executive, Lowe's began to transform itself starting in 2018. The company shifted focus from retail to professionals, as well as boosting online sales. And while Lowe's didn't garner nearly as many searches amongst financial pros this month, we actually see that as an opportunity. You see, everyone knows about the housing and construction boom. But while they focus on the biggest player, we looked at which company could outperform in the coming year. Our bet is on Lowe's. In the most recent quarters, Lowe's managed to grow sales amongst its pro customers by 25%. That helped Lowe's increase sales and expand margins in the most recent quarter. The company's current total home strategy incorporates growth with pro customers as well, along with expanding the online business, installation services, and products while driving localization. And looking at the financials, Lowe's saw steady growth, effectively doubling their total sales over the last decade. At the same time, gross margins are compressing while operating margins expand. During that same time, earnings grew by 6 times, while operating cash flow remained fairly steady. Additionally, Lowe's implemented shareholder-friendly initiatives, reducing the total shares outstanding by nearly 50% while paying out a dividend. And looking at valuations, when compared to Home Depot, Lowe's is cheaper in terms of price-to-earnings ratios, whether looking backwards or forwards. It's also cheaper on a price-to-sales and cash flow basis. Lowe's has a lower EBITDA and net income margin. Not by much, but enough that justify its need to expand its omni-channel presence and penetration with pro customers. Overall, we have to rate Lowe's at 6 out of 10. And although we believe Lowe's is a better value than Home Depot, both appear frothy in this market and priced to perfection. Instead, we'd be interested in Lowe's at a much lower price, closer to $150 per share. Click and subscribe to the Spill newsletter to get the full breakdown.